Good day, everyone. Today, we will be presenting our comprehensive valuation of LBC Express. Our analysis cover its beta coefficient, cost of equity, cost of debt, weighted average cost of capital or WACC, and future free cash flows. In the end, we will recommend whether to buy, sell, or hold based on our findings. I'm Daphne, and with me are Moy, Mona, Bong, and Mang. Each of us will cover different aspects of this valuation to ensure a thorough analysis. Before we dive into LBC's corporate valuation, let's first understand the Philippine freight and logistics market. This industry is evolving rapidly, driven by infrastructure development, e-commerce growth, and digitalization. The demand for cold storage, last mile delivery, and warehouse optimization is increasing, making logistics a key player in economic growth. In 2024, the market was valued at 19.16 billion US dollar and is projected to grow at a compounding annual growth rate of 8.1% until 2034. The freight transport segment dominates with 67% of the market share, driven by improvements in road freight, maritime infrastructure, and air cargo operations. In domestic air freight, AP Cargo leads with 30% market share, followed by LBC Express at 11%, reinforcing its strong presence in the logistics sector. Now that we have a clearer picture of the market landscape, let's focus on LBC Express, one of the key players in the industry. Up next, Moy will walk us through LBC's history, its milestones, and how it became the logistics giant it is today.
Let's dive deep into LBC Express. LBC started its historical foundation in the 1950s as Luzon Brokerage Corporation and later became LBC Air Cargo Incorporated. By 1970s, it evolved into the first Filipino-owned private courier company, pioneering 24-hour door-to-door express delivery. LBC later expanded into financial services in the 1980s, offering domestic remittance, bill payment collection, and corporate remittance solutions. And in 1987, it launched international money transfer operations and later leveraged its overseas network to expand its logistics business globally. In 1988, it rebranded as LBC Express Incorporated and became the market leader in Philippine domestic air freight forwarding, holding a 41.8% market share by 2012. Today, it operates in 22 countries and facilitates remittances from over 30 countries worldwide. LBC Express operates two main business segments. First, the logistics, which serves both retail and corporate clients. Its key services include courier, air, and sea cargo forwarding and balikbayan boxes. Retail logistics accounts for 77 to 80% of its total logistics revenue, operating in 1,525 branches in the Philippines and 632 locations in 29 countries. The second business segment is the money transfer services, including domestic and international remittances, bills payment collection, and corporate payout services with a growing global presence. Domestic remittances serve primarily unbanked customers through instant branch pickup, the Instant Pera Padala, home delivery or peso pack, and direct deposit or RTA, while international inbound remittances come from over 10 countries and territories through its overseas branches, affiliates, and remittances agents. As of December 31, 2023, the LBC's total revenue is 14.5 million coming from the logistics business and money transfer services. Both business segments are highly driven by retail logistics or the customer to customer segmentation at 77% and 98% respectively. While there is a close gap between the geographical markets, both service revenues come from domestic markets at 60 and 52% respectively. In total, the logistics business of the group accounts for approximately 95% of its total revenues, while money transfer services accounts for the remaining 5%.
The following pastel analysis describes the external factors affecting operation and organization of LBC Express. This covers political, economic, sociocultural, technological, environmental, and legal aspects. In these political aspects, the trade regulation government policies, and a country's taxation. In the economic part, there is the GDP, or gross domestic product. Exchange rates and inflation rates affects the financial curve of the firm. For the social aspect, which is caused by consumer demand side, are the demographic variables, lifestyle of the consumers, and social environment. In the technology side, which entails how updated and efficient the company is, their technology access, innovation and development and research. In the legal aspects, on how compliant is the firm to the country's laws and regulation, is how careful they are in data privacy, international trades, consumer rights, and code of conduct. And lastly, is the environment influence to the organization and how compliant is the firm to the environment policies and natural risk.
LBC Express Holdings Incorporated is optimistic about its future growth, focusing on boosting productivity, investing in efficiency, and adapting to economic changes. Committed to maintaining market leadership and delivering exceptional value, LBC prioritizes these key strategies to achieve its goals. LBC Express prioritizes customer satisfaction by delivering tailored solutions and exceptional service. Their commitment shines through initiatives like free online pickup, the new Rush service with guaranteed 1 to 2 day delivery, and the innovative Sakto Pack designed for social sellers. With real time tracking and 24/7 customer support, LBC ensures a seamless and reliable shipping experience. Currently operating in 30 countries, LBC continues to serve Filipinos worldwide with reliable logistics and money services. They have also expanded their domestic network to reach remote areas in the Philippines. LBC is well known for pioneering innovative courier and logistics solutions in the local market. LBC's Padala Remittance campaign resonates deeply with OFWs, emphasizing trust and reliability. They also leverage social media platforms and partnerships with influencers to engage younger audiences. To stay competitive, LBC Express is adopting advanced technologies to streamline operations, enhance tracking capabilities, and improve overall efficiency. LBC launched a mobile app that allows customers to schedule pickups, track shipments, and pay for services seamlessly. They also use advanced logistics software, AI, and data analytics to optimize route planning and delivery times. Recognizing the growth of e-commerce, LBC has integrated its services with various online platforms to facilitate seamless and efficient delivery for online businesses and their customers. They partnered with major e-commerce platforms like Shopee and Lazada to provide last mile delivery services. They also offer warehousing and fulfillment solutions for online sellers.
So after discussing the business outlook and strategy, now we're going to look into the financial health and valuation of LBC to help us assess whether to invest or not. First, we're going to look at into the component of financial position, particularly the assets and liabilities. Looking at both the short-term assets and liabilities, it is noted that the short-term assets would not be able to cover its short-term liabilities. Therefore, it poses a potential red flag for some liquidity concerns. Looking at the debt to equity history, as you can see, LBC's net debt to equity ratio is quite high, even more so from the years 2020 to 24. The net debt to equity ratio has even increased more than 100%. Looking at the revenue and earnings history, even though The revenue is increasing or showing an upward trend since 2015. However, if you look into the earnings or the net income, LBC remains unprofitable or it's showing a low margin for the past 5 years. Now, looking at the recent financial ratios of the company, as you can see, the liquidity and solvency ratios is less than one, which could mean that there is a potential liquidity or solvency concerns, especially in meeting its current obligations. Debt to equity ratio is also quite high, which means that the company is highly leveraged. There's also potential not to be able to meet its obligation. And then looking at the profit margin, it's also showing a low profit margin, which also means that there is a poor performance in terms of its financials in the utilization of its assets. Now, looking at the valuation of LBC, so these are the components of the cost of equity. Risk-free rate is at 5.96. This is based on the Philippine government bonds yield as of December 2023. Our beta is 0.75. Market risk return on equity is at 9% as of December 2023. And then our cost of equity, which is based on the capital asset pricing model, there's to get the risk premium, the difference between the risk-free rate and the market risk multiplied by the beta. And then you add the risk-free rate. So that's 8.24%. And then the growth rate for the Philippine logistics is at 1.73%. Now for our cost of capital computation. So we get the market value as of 2023 for the capital structure of LBC, and that is 13.4 for liabilities and 1.9 for equity. So the weight would be around 87% for the liabilities and 12% for equity. For the cost of debt, that's 13% based on the yields of the bonds. Then we get the after-tax effect, so that's 9.75%. And then you multiply by the weight of 87.58%, so the WACC would be 8.54%. And then cost of equity under the capital asset pricing model of 8.24%. And then you multiply by the weight of around 12%, so that would be 1.02%. So therefore, our weighted average cost of capital is 9.56%. Now, using the growth rate of 1.73% and the weighted average cost of capital of 9.56%, the estimated intrinsic value of LBC is above 11. So in comparison to the current market price of LBC, which is at 10.52, this indicates that the stock is trading below its estimated intrinsic value, suggesting a potential undervaluation. In conclusion, LBC Express Holdings Incorporated is a leading provider of logistics and money transfer services in the Philippines. Though, in terms of investment decisions, we still need to assess its recent financial performance, which is crucial for our decision. And these are some of the findings that we got from our assessment. The first one is there is a declining revenue. So there is a significant drop in revenue over the past years, raising concerns about the company's growth prospects. Number two, high debt levels. The substantial debt to assets ratio indicates a high level of financial leverage, which could pose risk, especially if the company faces operational challenges. Low profitability. Well, the company remains profitable. However, there is a showing of a low profit margin, which suggests limited profitability. And also, there's also market volatility, which may pose a higher risk tolerance. And although this may be appealing to those who are risk takers, but not so for those who are not. Now, considering all of the factors above, our team has decided not to invest for LBC. Thank you.